So we're doing the quiz. Oh, this session is different than the other class. You know that too, right? You can always watch what we did in the other class. It's okay. I always do something a little different. I do whatever the students want in the class. I don't care. Okay, so you can watch those, do what you want. So I think the best thing to do is have book out, work a bunch of problems. Get the quiz out, work them, right? If you get hung up on something, you guys can call me. I haven't had very many people call me this semester, a couple, right? But you're welcome to. Of course, we haven't gotten to the tough stuff yet either. Okay, we haven't. It's still easy, honest. Okay, anyway. So on that problem then, what did they pay for the equipment? Back when we bought the equipment, what did we do? We debited equipment, didn't we? How much was it? $35,000. $35,000. And we credited cash for 10 of it, was it? Excellent. And we credited notes payable for 25. So if we're accruing interest, it's going to be on the note payable, and if we're depreciating, it's going to be on the equipment. But then since then, we paid part of the note payable, didn't we? So in a later one, what did we do? When we paid the $12,500 on the note, we would have done what? Debit the note payable, right, of course, for $12,500. Which leaves me with $12,500 I still owe, right? If you think about note payable. Started at 25, right? It's not 35 because we only borrowed the 25, huh? Okay, good. And then we paid off 12,500. So how much do we owe that we're going to accrue on at the end? 12,500. Because you're not going to have to pay interest on 25,000 if you only owe them 12,500. Is that right? Is that right, guys? And this first one that we did, we credited cash, and what did we debit? Time went by, we had use of the money, interest, expense, excellent, okay? The cost of borrowing the money, one of the costs of getting the piece of equipment, we're using the equipment to deliver product maybe, which is generating revenue. One of the costs is the interest, isn't it? Everybody agree with that? Just like gasoline, right? Or repairs for the truck driver's salary, right? The interest is a necessary cost of having the truck, right? So it's a cost we incurred, that interest expense is a cost we incurred to get our revenues. How much is the interest expense, by the way? We took the 25,000. What was the interest rate? 6%. Times 6%. And how long did we have it?
6 months.
This was January 31st, and this is July 31st. Am I remembering the problem right? Sound right? Yeah. Okay. So this would have been how much? $750, is it? Okay, would have been $1,500 for a whole year. $750 for a half year. So we would have paid him what? 12,500 plus 750? 13,250, is it? Excellent. Okay, so those are already done, aren't they? Okay. So now when you do M, that's interest, isn't it, on the debt? Okay. So what would we do? How much do we owe him now? 12,500. What's the interest rate? 6% a year. Okay. How many months went by? This is what gets you. Only 5. Yeah, that wasn't that mean. At 12/31, this is going to be an adjusting journal entry. Requires you to settle down and think. How do you do that under pressure? I don't know. You just get so you can do it. Anybody ever done a sport? How do you get so you can perform in a competition?
You get nervous, you do bad.
You get nervous and do bad and never do well, right? Nah. What you do is you kind of get used to it, don't you? Right? You put it out of your mind. You think about what you're working on. How many you ever? I couldn't hit a baseball in my life depending on it, but I know I talked to baseball players. I did football. Little tiny guy. I'm not anymore, but I was tiny then. 140-pound lineman, ridiculous. We had 2,000 kids in high school. The halfback behind me weighed 200 pounds. I blocked to get out of his way. Right? Yeah, he ran right at my back, so I got out of the way. Anyway, but what do you do? If you're trying to hit a baseball, what do you do? Think about what you're doing or do it? You do it. You concentrate on what you're doing, don't you? You notice the fans out there? The only voice I could ever hear when I was a wrestler was the coaches. We were pretty good. Well, I wasn't, but the team was. And the coach would be yelling and screaming at us, and everybody in the place would be yelling and screaming because we were beating somebody, right? You know, and you'd be out there one-on-one, and the only voice I could hear is the coaches. How could you possibly do that? Every guy on the team, that's all they could hear is the coach. You better hear the coach. You want to be out there again, right? I'm not kidding. That was it, you know. So when he yelled, I got out. Everybody else I blocked out totally. Okay, what do you do on a quiz or a test? Same thing. Can you do it? What do you do when you study? Do that too, for everything. Don't have to read you on what you study, for crying out loud. You're wasting time. Do the work. Get it done fast. And then go do something fun. Right? And by the way, do you feel guilty when you go do something fun if you just work your ass off? Nope. Do you feel guilty if you go do something fun like a whole bunch of you did this weekend when you weren't ready for this quiz? Yep. How do you get away from feeling guilty? Do the work. You ever have to worry about your job if you did more than your share? And you did a really great job? No, you get promoted, you get raises. And then what do you do in your free time? Whatever you want. And by the way, you have money in your free time. It's kind of nice, right? Gee, I put out Steve Cake in last summer. I should have to come and visit you guys. He's working over for GE. And some of you meet Steve? Did Steve come? Or? I had an interview with him the other day. He has nothing to do, time to talk to you. Nice contract. Are you interviewing for the internship?
Yeah.
Oh, good man. Good for you. And you're a freshman?
Yeah, he said I couldn't have it just because I don't have enough.
I know, it's terrible.
But it's like December,
You're such a dumb shit. Don't interview for a job that you couldn't possibly get. Who suggested you do that?
You're not qualified.
Yeah, you applied. And then when you're not qualified. Oh, you will be in what, January? December. And he already knows he wants to hire you. You know why he knows he wants to hire you? He doesn't know how you're doing in this class. You get an F in here, by the way, you want to hire you. Okay? But what's the deal? He's got the guts to go do it. Clearly not qualified. What's wrong with you? Yeah, good for you. That's fantastic. Okay, really good. He's going to want to hire him. And he's going to want him to be permanently there. And he does a good job when he's working there. You don't look like you do anything. I don't know how you're doing in here. You don't look like you do. Anyway, so if he does a really great job when he does this internship, then Steve, who's a big shot over there now, I don't know why, he's the dorky guy. Anyway, he is kind of big guy, kind of nice guy, good old boy type guy. He only makes about 5 times what I do a year. Well, maybe 3. He buys me really good bourbons when I have a bourbon with him. Yeah, anything I want. Yeah, I don't buy $100 glass of bourbon or something. Because he doesn't care. He can afford it. But anyway, yeah. What he's going to do is he's going to recommend you for their international training program, where they train the people who are going to be in their executive suite someday. That's what he did. He got an internship there. He worked his ass off. And it's the only job he's ever had, slacker. Only got one job. I don't know why he stays with it. He doesn't know why he stays with them. Oh, that's right. They pay him a fortune. Yeah. And he gets to do fun stuff. Did I tell you he worked on the NBC divestiture? GE used to own NBC. Remember David Letterman talking about NBC? He worked for GE, and he's on because NBC had the Tonight Show. David Letterman. Maybe Johnny Carson. Whatever. Anyway, yeah. So it's a nice deal. You got going. Don't screw it up. All right. How many months? What were your months here? 5. So what would a year have been? 12,500 times 6% is what? How much is that? More than that. For a whole year. Would have been 750, right? And 6 months would have been 270. Okay, so yeah, so we're going to pay interest of 375 if we pay it. That's true. Okay, but it would have been 750, wouldn't it? And then what do you do? Divide by 12 and take times 5. How much is that? 312.50. And that was probably your question, huh? 312.50, you got it? Okay, so now all we have to do is accrue the interest. We're not paying anything. We're not paying off the note yet. So what would you do at December 31st when we accrue the interest? Time went by, and we incurred the cost of interest, so what do we have? Interest expense is the debit, $312.50. And why is it interest payable? You're right, but why is it? We haven't paid it yet, and we owe it. Now, every day that goes by, we really have some interest expense, and we have some interest payable, right? We could make a journal entry every day if we wanted, right? For whatever the interest is for one day. But nobody does it that way. We can make a journal entry every day when you don't need to. When do we do adjusting journal entries? Only when we do financial statements. So why did we have to accrue 5 months interest here?
This was the end of the year.
Because it's the end of the year and I want to do a financial statement. So I've got to accrue whatever has accrued. That makes sense? Did that do it? Let's do one other thing with this one. Let's say we are now paying it off. So I didn't have this in the problem, but I could, right? It's now January 31st. That's when it's going to be paid off, right? That's the end of the next 6 months. So how much note payable are you going to pay off on that day?
12,500.
Yeah, the whole 12.5 that's left in the account's going to go away, right? You're going to debit it for 12.5, aren't you? Okay? Excellent. What else are we going to have to pay off? Don't we owe them that interest? We're going to have some interest expense, I agree. But aren't you also going to have to get rid of the interest payable? Yeah, I got to get rid of that one, all right? You got that credit in there. Okay, interest payable. This was a good one to go over again. This is excellent. How much is that? $312.50, right? Okay. And how much cash am I going to give them, do you think?
Take the notes payable plus the
That's the interest payable there. Okay, we're going to have the note payable plus the interest payable, but there's more though. There's one more month, right? How much interest for 1 month, you guys? That's 5 months is $312.50 divided by 5. What is it? $62.50. And you already said that you thought the interest is $375. It is, isn't it? How is it $375, you guys? That's 12.5 times 6% times what? 6/12, right? That's the $375. Does that do it? Everybody see it? Don't just calculate these things. Understand what you're doing. They're going to always look different, right? That's it, isn't it? So what's the difference between those two? It's the $62.50. That's the expense for January, isn't it? And we're going to pay it all. So what do we pay? $375 of interest, $12.5 of principal, and how much is that?
12,807.
Did that do it? That helped everybody. That's good. And then what we want to do is the depreciation one. What do we pay for this piece of equipment again, you guys? It's at 35 grand. When did we buy it? January 31st. What's our year end? December 31st. How many months depreciation do you want to have? 11. Can you see how in the pressure of a quiz nobody gets this right? Almost nobody does. Why?
Because we'll just think
Because we'll assume something without just reading it and paying attention. Happens in real life too. Oh, it's a year, right? One. Oh, I got to fix that. Okay? So you just relax. Okay? Figure out what happened. So what do you want to do? Oh, by the way, are we depreciating $25,000 or $35,000? Seeing as we paid $35,000 for this thing. 35, sure. So the cost is $35,000. Now, is there going to be any salvage value left at the end or residual value? That's what we're going to sell it for at the end. What was it? Yeah, it happens to be $2,000 because I wanted to make the math come out easy, right? Okay. So, what are we going to depreciate? We call that a depreciable value if you want, huh? Okay. So what's depreciable value? 33. So I'm going to depreciate the 33,000 over what period of time? What's the life of this thing? 6 years? How many months is that? That's the way we could do it. We can divide 72 months into it, couldn't you? It says it's straight line. There are other methods, but for now, just straight line. Okay? We'll have a chapter where we do that fairly soon. So if I divide 72 months into 33,000, what do I get depreciation per month? What is that? Well, that'd be a year. That'd be 11 months. What is 72 into 33,000? For every month. If I was doing monthly financial statement. 493.58.
458.
458. Even? 33 cents forever. Okay, all right. So you can leave that in your calculator, right? Then what would we do, everybody? By the number of months you have. It's 11 months, isn't it, this year? Right? Because it's from January 31st to December 31st, isn't it? So here's my adjusting journal entry. It's going to just be the 11 months. What's 11 times 4, 5, 8, 33 forever? How much was that? 67 maybe, rounds up. Something like that, right guys? Okay. This is how much of this utility value I think I've used up this year. So what do I want to do? If I used it up, it is a cost of having the piece of equipment, isn't it? Depreciation expense, excellent. And that's the way, how do you know if something's an expense? Is it something you used up? Trying to generate revenues? It's an expense. What if it's something you bought and you haven't used it up yet? What is it? It's an asset. What if it's something you owe somebody? It's a liability. What if it's a representation of your wealth? It's an equity. right? Everybody agree? What if it's a representation of increasing your wealth due to selling goods and services to people?
Revenue.
That's a revenue. That's how you decide what they are. You don't memorize what they are, right? It's what happened. What do I have? It's only those 5 things. Okay, so this is going to be 504167. Good. I bet I have to credit something for that. What would you be tempted to do, seeing as it's a piece of equipment you're using up?
Accounts payable.
Not accounts payable. That'd be I owe somebody money. You wouldn't want accounts payable, would you? I'm not going to pay anybody this. We want to go to accumulated depreciation, but if you remember that there's such a thing, right? If you realize there's such a thing. But what's our tendency to do? When I use up an asset, what do I want to do? Credit the asset. So when you feel like you should be crediting equipment, yeah, why don't you? Because the equipment's not going away, right? We still have the piece of equipment. So we're going to leave that equipment on our books. What did we pay for it? 35 it was, right? So included in the equipment account, it might be $35 million, but there's $35,000 for this piece of equipment, right? Included there. We're going to leave that alone until we sell it, okay? Until we get rid of it. Or abandon it, throw it away, okay? What we're going to do instead of reducing equipment is we are going to increase accumulated depreciation. And what accumulated depreciation will represent is the portion of the equipment we have used up. Got it? Okay? So how much do we think we've used up?
1,041.67 cents.
Got it. That's it, everybody. That's all it is. So, credit accumulated depreciation. So you don't have to remember that either. It just makes sense, huh? What would be the net book value of this equipment right now? What would you show on your balance sheet? I'd show equipment at $35,000. This is the only piece I had, I guess. And I'd show accumulated depreciation, wouldn't I? How much is that? 504,167. And what would I show for the net book value, net equipment, net of accumulated depreciation? 29,958.33. Did I do it right? Ta-da. Okay. What I did now, go away. Go away. It won't go away. Okay, there we go. All right. Everybody good? Does that make sense to you? It's not a big deal. Okay. So does that do it for you? And you know what hangs you up is the 5 months and 11 months. Okay. Good. So let's do something else, huh? Want me to make up a couple of accrual and deferrals? We can go through the quiz if you want. We did the first page of the quiz with the other group.
Can you number 2 and 3?
Number 2 and 3 on the quiz? Sure, you can do that. Yeah. Probably number 4 is not too bad for you. I like to put something on the quiz to make sure everybody gets at least a point. And some people will miss those. Oh my God. Yeah, anyway, don't miss those. Be careful though. If it says increase, that's different than it says decrease, right? That's the opposite. That gets to people once in a while, and it's real frustrating. Not for me, I think it's not. But one. Okay, do you want to do 2 and 3? Is everybody good with 1? Yeah. No. Want to do 1?
Yeah,
We can do 1 in the review section. Do 2 and 3 now?
Yeah.
That'd be all right? Yeah. That'd be all right? We're going to make it a review section. Cool. Okay. Who else needs to do 1? You can make it? Yeah. Okay, cool. I'm going to do it. Okay. Yeah. That'd be good for everybody. It really doesn't matter how many times you do something, does it? Okay, I got that a little better, a little better. Who's had accounting before? You have, right? Who else has had a lot of accounting? Are you guys learning anything? Yeah, it's funny. When you already know how to do something, if you listen to it again, and you work through it again, and you work a bunch of problems, what happens to you? You get it more and more and more solid. I taught it was continuing professional education class. It required it as a CPA or an attorney or a doctor or whatever, for the thing in doctor's case, but everybody's different. You do continuing professional education. I'm sorry, guys. But every year you have to go continue your education because things are changing and things are getting out. So anyway, I was teaching. I didn't know what I was doing, but I was teaching. It's real early in my teaching career. Still don't know what to do. But anyway, I was teaching a cash management seminar for a couple of days for a bunch of CPAs. And I hadn't done that one before, and I thought it'd be really cool because I was always doing accounting and auditing type stuff, you know. This will be fun. It'll be cash management. And they sent me this material. It's from the AICPA, American Institute of Certified Public Accountants, right? And the state of Washington is where I was teaching it for them. And they got this material, and I had to use the material. It's 2 days long. And I looked at it and I thought, I teach this stuff to freshmen and sophomores. This is ridiculous. These guys are going to be taking this, right? Are going to be taking this because they want to enhance their ability to work with their clients on cash management, right? And it was really ridiculous. It was just ridiculous. So I'm trying to go through it as fast as I possibly could. And so the first day, I'm dying, right? I mean, you're up there, and it's not like you guys who are going to give you a grade, right? They're going to evaluate me. They're paying for it. They want their CPE credits, right? And they want to know something, right? So they're sitting out there. And I'm going through this stuff, and they're complaining, right? I mean, they're complaining verbally during the thing, at the breaks, at lunch and stuff. So at the end of the first day, this fellow comes up to me and says, you know, a lot of people, there's a lot of people complaining. They're all complaining, and I'm looking forward to the next day of this, right? And I'm going to do some other stuff that I brought in because we were going slightly faster, right? But still, people are pissed, you know, and they have to be there or they don't get the credit, right? And so, anyway, he comes up to me and says, Keith, you know, you need to feel better about this. He says, I know they're complaining an awful lot, but he says, you know what? This is all I do for a living is I help people manage their cash flow. And I've learned 2 things today that I'm going to use with my clients, and they are going to be more profitable, and they are going to pay me well because I now know this. 2 things. And he says, I bet I'm the only person here that learned those 2 things because everybody is concerned that you're covering things they already know. What's the message in that, you guys? Whether you're a professional or not. What do you do every time you have an opportunity to learn something else? Learn it. What if you're reading a big long page, you know, a journal article or something, and everything is stuff that you already do? What do? The stuff you already know, you go through real fast. But you keep thinking, because what's going to happen? At some point you might hit something that, and you're being forced to read it, right? Yeah, at some point you're going to hit something that's what? Because it's your job. You're going to hit something that you don't already know. And what do you do when you hit that? You slow down, you add it to your toolkit, and you know what? It's real easy to learn it because you know all the other stuff around it. Right? I don't know why people write papers like that. I prefer when I do an academic paper, I just like to write what I learned in my research. But you know what? You don't get away with that. You have to talk about what everybody else did, right? And how yours fits in with theirs, and that's logical, sort of, right? But what really matters is the crux of it. So I'm real careful. I put in my introductory paragraph, and I put in my final paragraph the stuff they need to know. They can read the rest of the paper if they feel like it, right? And then I give them a whole bunch of data sheets and stuff, you know, right? Statistics and all that stuff. Okay? So think about this stuff. So when I ask you, are you learning something? I'm really saying, are you paying attention? Because there's got to be stuff you don't know. There's stuff I don't know. Right? I've been doing this a long time. Right? And what we're already covering. Oh, there's another way to do this. Okay? Another way to look at it. All right. So anyway, what does it say on number? What are we doing? 2? See number 2. Excellent. What does number 2 have in it? You want to read it to me? I don't have a copy of it.
What would be the effect on the year-end December 31st financial statement?
You know, immediately I would think this. What's the effect on these? Wouldn't you? Financial statements. And what are they asking? Increase, decrease, or understated or overstated?
Overstated, understated.
Overstated, understated. You know what? If you know the increase or decrease to each of the accounts, you automatically know the overstated or understated. So it'd be a nice process, huh? Okay, so what'd they do?
So what would be the effect of failing to record the necessary adjustment for insurance that was used this year?
Okay, so if I knew the adjusting journal entry, I would automatically know what the impact is on the financial statements, wouldn't I? Right? I need the adjusting journal entry. Now what happened? What am I adjusting?
On March 1st, a $3,600 payment was made for insurance coverage for 2 years.
Okay. I know I credit cash. How much was it? I know it's March 1st, and I know I credit cash. Don't you guys? How much? $3,600. So don't make a big deal out of it. Of course that's what it is. What's the debit, though? Ah, that's the hard part. You want prepaid insurance? Why? And because they said what? You're right. Just prepaid insurance, but I could record it 2 different ways. Okay? But for sure, because of this problem, says it went to a what? Deferral account, which is a asset account. It's got to be prepaid on. Could it go to an income statement account? Could I go ahead and expense it? I could go to insurance expense if I want, and we'll do it that way here in a second, okay? So, but what they said was it went to the asset account, right? Could I have said a real or a permanent account instead? Of course I could, right? Means the same thing, right? As an asset, okay? All right? What if they went to a nominal or a temporary account, which would be an income statement account, an expense account? Then my adjusting entry will be different, okay? So we'll do it both ways. So the way the problem is written is this, isn't it? And it's prepaid insurance. Everybody sees why? It says it's an asset, right? And you're right, we haven't used it up yet, so it's prepaid. Regardless of how I recorded it, it's a prepaid. But remember, I only have to have the accounts be accurate, correct, when I do a financial statement. So I could care less if you put into prepaid insurance or insurance expense. But if, by the way, on number 4 there, the back page, or number 5, the back page of that quiz, if you went to prepaid insurance, it changes your adjusting entry, right? If you went to insurance expense, it changes your adjusting entry. You got to get both of them together, okay? So you got to make sense. All right. But I can figure it out, honest. I can do it. Okay, so what's the year end? 12/31 it is, right, guys? So what happens here? What accounts am I messing with? I have prepaid insurance with how much in it? 3,600. What do I have in insurance expense relating to this one? I guess nothing. Okay, this was March 1st. It's March 1st, right? Not March 31st. It's March 1st. That's the beginning of March. How many months have gone by during the year? Just 2, right? March 1st. January and February. How many months are left in the year? 10. So how many months are we looking at here? 10 months, right? Everybody agree with that? 10 months between March 1st and December 31st. Okay, so think about this. That $3,600, that's an insurance policy for how long? 2 years, right? 2 years. Divide 24 months in there if you want. What is it every month? I think it's $150 per month. Don't you guys? Is that right? How many months have gone by? Not 2.
10.
March 1st to December 31st. It's 10, isn't it? Okay. 10 months went by. Okay. Every month, how much prepaid insurance do I use up? 150, right? How many months went by? 10. How much have I used up? 1,500. Which account should represent the amount I've used up? Insurance expense. Sure. This should be 1,500. What is it now? Nothing. How are you going to count from nothing to 1,500? It's just an adjusting entry, right? From where it is to where you want it to be. So I'm going from nothing to 1,500. How much am I going to debit it for? 1,500, of course. Okay? Debit insurance expense for 1,500. Okay? What did I use up? The prepaid. What do you do to the asset if you use it up? Credit it. How much have I not used up? Let's figure this out. If I take 1,500 out of prepaid insurance, what do I have in there now? 3,600 less 1,500 is how much? 2,100. What does that represent? How much is left? How many months are left if it was 24 months and you use 10? 14. How much is it for every month? 150. What's 150 times 14? 2,100. It's a miracle. We're showing how much we did not use up on the balance sheet, right? Prepaid insurance. And we're showing how much we did use up on the income statement, insurance expense. That's what we're doing, isn't it? This is common sense, not memorized, huh? This is what happened. Okay? Now, this is the adjusting entry. What's the impact of not recording this? Well, what would be the impact of recording it? What if I asked that? On the next question, I did ask that, right? What happened to insurance expenses you debited? We're increasing it. We already knew that, right? What about prepaid insurance if you credit it? We're increasing the expenses by 1,500. What would happen to prepaid insurance? We know what we did, right? We reduced it. That's an asset. We have less. Okay. Well, what would happen to the net income if you increased expenses? Go down by the 1,500. What does that do to retained earnings, which is equity? Goes down by 1,500. How about liabilities? Do you see a liability in that journal entry? Nope, no effect. How about expenses? Oh, I did expenses. What about revenues? No revenue in there. Nothing, right? Everybody good? Okay, so if I was asking for increase, decrease, it'd be that, wouldn't it? Decrease, no effect, decrease, no effect, increase, right? Decrease. Everybody agree? What if I'm asking for understated or overstated? If I need to reduce assets, what are they now? Overstated. If liabilities are correct, no effect, they're correct. Equity should be lower, what is it? Overstated. Revenues? Well, revenues, no effect. Expenses? Understated, yes. And net income? Overstated, which is what caused the overstatement over here, right? Same thing. This is easy, isn't it? Okay, let's change this problem just a little bit. Let's say that what they did, now this is not what's in the problem, this is a modification of it. Let's say instead of going to that asset account, right, to a real or permanent or asset account, right, prepaid, let's say they expensed it, right? They went to a nominal or a temporary account. Let's do it that way. What would that look like, you guys? So this is modified, okay? What would the entry have been at March 1st? And then what would you do at December 31st? If I decided, it's going to be insurance expense anyway someday, what if I decided just to put it in a nominal account, temporary account, income statement account, insurance expense, right? What if I decided to put the whole $3,600 in insurance expense? Is that okay with you? Sure, it doesn't matter. I know it's not used up yet, it doesn't matter. Every day that goes by, I'd have to change the accounts anyway if I wanted to be accurate all the time, huh? When do I need them to be accurate? Balance sheet, income statement account. At the end of the year when you do a financial statement, or quarterly when you do a financial statement, or what if you do a monthly like almost every company does? Every month. You gotta have them right. Okay? Nobody does it more often than once a month. So, okay? And you can track your sales every day and stuff if you want. Getting an income statement once a month is good enough. So what if I put the $3,600 in here? And how do you know what I meant for you to do? I'll tell you it's an asset, or I'll tell you it's an expense, or I'll tell you that it's a permanent, or I'll tell you that it's nominal. Got the idea? No, that's telling you what it is, okay? So what would this credit be, of course? Cash still, right? So what do I have now when I do this adjusting journal entry at December 31st? Where am I at, you guys? What do I have in prepaid insurance relating to this particular policy, this insurance policy? Nothing. Didn't put anything in, did I? What do I have in insurance expense? $3,600. Which is going to be what? The March 1st date. What's my year end? December 31st. So you figure out what the entry has to be. What do you think? Think about it. What do you want the balances to be? Let's see, that was $3,600. For how long? 24 months, right? Which is $150 a month. Everybody agree with that? How many months went by? 10. From March 31st to December 31st. So, how much is that? Still $1,500, okay? What do we want to be $1,500? Is that the amount we used up or the amount we had left? That's what we used up. What do you call the account that we reflect for what we used up? Expense. This one's got to be $1,500, doesn't it? Sure. How much did you not use up? 14 months at $150. What's that? $2,100. What should be $2,100? Yeah, insurance I haven't used up yet. What do you think it is? Prepaid insurance, $2,100. Okay? All right? Everybody good? Every time I look at him, I think how much money Steve makes. How old is Steve? Mid-30s somewhere. Yeah. Pretty early stuff. He was 18 when I met him. He used to work for my wife. She was the MBA director, and he was a work study. They were giving him minimum wage. First day he worked for her, she brought him into my office and said, this kid needs to not work for me. You find him an internship. I was the sheriff. He's working at GE within a couple of weeks. Steve would kill there as soon as he can. He will. It's awful. People like to hire flaky little kids. Okay, anyway, doesn't well to work hard. So what do we do? How do I get from 0 to 2,100? I think I debited for 2,100. How about you guys? How do I get from 3,600 down to 1,500? I think I credit for 2,100. True? Don't you? It's an adjusting entry. I'm getting from here to here. It's an adjusting entry. I'm getting from here to here. It's remarkable it balances, of course, a little. Okay? Debit what? Prepaid insurance. This would be the adjusting entry if the problem was written that way. Don't memorize, right? Figure it out. You with me on this? Working? Good. All right. I always was so skeptical. I like it. That's good. All right. Use your sounding board. Okay. Yeah, I got it. Got it. Okay, and then credit what? Really what it is she's bored because she already knows how to do it. I like that. Okay, good? Good? All right. Great. Tell me what the impact is. First, what does that entry do to the financial statements, and then what would be the effect if you didn't do the entry? That's the way to look at it, okay? Do it both ways, just be careful which question I ask there, right? Understated, overstated, or increase, decrease. I can change them around real easy. What does this do? What does a debit to prepaid insurance do? That's what you used to talk to me, okay? All right, and then what's this one? What's this one? What's this one? Decrease expenses. Everybody agree with that? Well, increased assets, right? That's this one. You have decreased expenses. That's that one, right? What does that do to net income? Increased net income. And what does that do to equity? Increases. That worked, didn't it? You see it? What about liabilities? There is no liability in there. What about revenues? There is no revenue in there. You guys good? So this time, what would over and understated be? If assets should be more, what would we say? Understated, right? Liabilities, no effect. Equity should be more, what would you say? Understated. Revenues, okay, no effect. What would you say on expenses? Overstated now, because we put it all in expense and we took some of it out, right? Just take it out to fix it. Okay, and net income? Understated. Got it? Yeah. Everybody good? We should net income constant. Take it. Easy, huh? Okay. Let's try the next one. What's that? Number 3, I guess. All right. What is that one? He wants to know increase, decrease. What was the transaction?
You paid full for 10,000 notes receivable.
Okay, I'm paying off a note receivable. So I have a note receivable. So somebody borrowed money from me, right? Or I sold them something, right? And they promised to pay me later and signed a note. How much was it? 10 grand? Is that right? Okay, 10 in there. And they're going to pay it off. Is that right? What date was the note? They didn't give you a date, did they? But they said it's 6 months, huh? So it all happened within the year. Everybody good with that? So it's going to be 6 months interest. So what? 10,000. They're going to pay it all, aren't they? Stressing my memory here. I just did it too. What's the interest rate? 9%. So that would be $900. But that'd be for a whole year, wouldn't it? Because we always state interest rates per year unless it says so much per month. I've never seen one that said so much per 6 months. Right? I know nobody does it that way. So you say a year, or you say how much it is per month. Okay? Right? So 9%. And how many months went by? 6. So 6 plus. So it's 900 for a year, so 450 for half a year. Would you guys agree with that? So they are going to pay us how much? 10,450, right? Sure. So we'll debit cash for 10,450. And we failed to record this, right? That's what we're saying. Failed to record it, so it's wrong. Okay. If we do record it, what's it going to do? Okay. 10,450. What are you going to credit? What do we get rid of? No receivable goes away, so it's 0 now. Good. And what's the 450? Interest again, but interest what? I loan people money times by. Why do I loan them money? To earn revenue. And we call it, see, this is interest revenue. Very good. Okay, just let yourself think, we earned it. It's revenue. You have to be for interest. It's interest revenue. Okay, good. What does that do? I made her angry. She's leaving. I'm kidding. I know you have to go. He talks to you. Okay, so here we go. What would this do? Be careful. This would increase cash 10,450, right? But what does this one do? Decreases notes receivable by 10,000. So what happened to assets? Net increase by 450. Everybody see it? That's what you tell me. I don't see a liability there, so I bet you equity went up by 450. What do you guys think? because there's no effect over here. Everybody agree with that? Okay, it's gotta be the same thing. Okay, how did that happen? What would this do? You'd increase revenues, wouldn't it, by 450? What would happen to expenses? Nothing. There's no effect on expenses. There's no expense in the journal entry, right? So just relax. Look at your entry. Net income would be increased by 450, which of course is what caused equity to go up by 450. And we're done. How about if it was understatement or overstatement? Assets should be higher. They would be now what? Understated. No effect for liabilities. Equity would also have to be understated, of course. Okay? Revenues, understated. Expenses, no effect. Net income, understated. Do a bunch of these. Okay? So, let's take a break. Don't have even time yet. About 30 minutes. We got 5 minutes. Let's do something else. Okay? Why not? You don't want to leave early, do you? Oh no, that'd be terrible. It's your money's worth. It's bad. Going to a movie, a concert, they don't finish the money. I went to a concert once. Bonnie Raitt it was, and I really like Bonnie Raitt's music, but we went over to the casino over in Jeffersonville, or, next to Jeffersonville, whatever that's called over there. They have a casino, and I don't go to casinos to gamble because it's a negative present value investment. They build those casinos with people's money, they lose their money, so I never gamble. If I'm going to gamble, do it in the stock market, where you could win, right? I'm going to gamble where I'm going to win, not where I probably will win, not where I'm going to probably lose, definitely lose, really. But anyway, we went over, and she was really late because the plane had just come in, and she was tired and everything. She got up there, and she sang a few songs, and she said, I know you guys really want to go inside and gamble, so I'm just going to stop now. I'm not kidding. Never went back to the casino again for another concert. I wasn't there to gamble, I was there to listen to her. So we went inside and spent a whole bunch of money on a really good steak. The restaurant, the casinos really expensive too. Yeah. No, I don't mean the buffet, don't go to those things. Those are awful. Yeah, but anyway, yes.
Did you say the liabilities were overstated?
No, I said the liabilities were nothing. I hope I said that.
Yes.
The liabilities are no effect. No effect. Equity is understated. Okay? Very good?
We're not there when it's overstated.
No. If you need to increase it with the journal entry, it's understated now. Do that again, right? This one, what's the deal, you guys? It needs to be increased, so it's understated now. If it needed to be decreased, it'd be overstated. Same with this one. It needs to be increased, it's understated. This one needs to be increased, so it's understated. No effect. This one needs to be increased, so it's understated. Plays head games with you, doesn't it? On a question mark. So think about it. Let yourself think about it, work a few of them, right?
So if it increases, it's overstated?
Well, if it needs to be decreased, it must be too high now. It's overstated. If it needs to be increased, it must be too low now. Understated. It's the reverse image, isn't it? Mirror image. Okay, got it.
Because he said, because he failed to record it, so therefore, okay.
Makes
If
sense.
it needed to be decreased, it'd be an understatement, and if it needed to be decreased in the adjustable journal entry, it's an understatement.
After you guys get this through your head a little bit, you're going to think, how did I not get that instantly? Yeah, it kind of feels that way. But, yeah, semantics a little bit, right? It's language. Oh, well, we're going to quit 2 minutes early. Don't turn me in. They'll dock my pay. Anyway, 2 o'clock downstairs. Is that right? So we get a 12-minute break. 10. That's good.